Welcome to Texas Property Tax Strategies with Chris Tejeda.
Welcome to Texas Property Strategies with Chris Tejeda. Chris is an attorney at Boling Tejeda in Allen, Texas, where he focuses on commercial property tax disputes and litigation. He works with business owners and real estate investors across Texas to challenge unfair property tax assessments. I'm Leanne Lyon, and today we're breaking down how the Texas property tax system actually works and why understanding it matters to property owners. Hello, Chris.
Hi, Leanne. How are you today?
Wonderful. Excited to jump into this. But, Chris, before we dig into the systems itself, can you tell us a little bit more about your background and what led you to focus your practice on property tax disputes in Texas?
Sure. I grew up in North Texas. I graduated from high school in Mesquite, Texas in 2004. Thereafter, I attended Texas Tech University in Lubbock, Texas, where I majored in business management. After graduating from there, I went to law school at the SMU Dedman School of Law in Dallas, Texas. And that is where I got my first inkling of the property tax industry. I actually interned with a company that did residential protests during the summer, and it was a great experience. Before that, I didn't even really know about the property tax system, and nor did I know that you were able to fight your value if you think that your property's been overvalued, amongst other things. And so after I passed the bar exam and started working in this industry, I continued my education. Received an MBA, Master's of Business Administration from UT Dallas, along with a Master's of Science in Finance from UT Dallas. And both of those kind of concentrated in real estate. And that helped me learn more about the industry and how what I do on the legal side applies to that industry. I chose to focus on property taxes because it's a niche field and I wanted to become an expert in something. I'd rather not be kind of a jack of all trades. I wanted to really focus on something and become really good at that. Local government entities have a lot of power when it comes to setting values, and it's almost too easy for the smaller guy to be taken advantage of. So my role in focusing on property tax appeals is to ensure that rights are protected for every Texas property owner. While I focus on commercial property appeals, I do from time to time advise on residential appeals. We just don't handle a lot of that here at the firm. There's also kind of the combination of the fact that Texas has some of the highest property tax rates in the country. There's also a very strong demand for real estate in Texas as people move into Texas from other states, not only individuals and families, but businesses as well. In fact, last year in 2025, over 1,400 businesses either moved to Texas from another state or expanded their Texas footprint within the state. And that's quite a lot. There's a lot of demand, and with demand comes increased prices, and with increased prices causes higher valuation. So it's my job to just make sure that everything kind of stays in check, and I really enjoy what I do.
And it also sounds like you're going to stay in business, which is a good thing.
Absolutely.
So, for a commercial property owner who hasn't spent much time studying the system, what are the main parts of the Texas property tax system that they should understand first?
So in understanding the Texas property tax system, I like to look at it in kind of three branches. There is the valuation of property. There are the tax rates that are applied to that valuation. And then there's the collection and spending aspect of the tax system. One thing to know about Texas, which makes us, again, very popular, is that there is no state income tax. There is also no state corporate income tax. There is a tax on gross receipts for businesses that make above a certain amount of money, but there is no corporate tax return that is required to be filed in Texas. The valuation part of the system deals with appraising all real estate in Texas. In Texas, the property tax system is an ad valorem tax, and ad valorem is Latin for at the value, meaning that all properties should be appraised at their market value. This is a hypothetical valuation as of January 1st of the year in question. So Right now, we're in 2026, so that hypothetical valuation occurred on January 1st of 2026, and that will set your taxable value for this year. In order to value each property, each county in Texas has a central appraisal district or a county appraisal district. That district sets the value for every parcel within the county. There are a couple of counties that actually share appraisal districts because they're very, very small. But for the most part, every county has an appraisal district. The appraisal district is led by the chief appraiser, who is chosen by the board of directors of the appraisal district. That board of directors usually consists of the chairperson, who is usually the tax assessor for that county, but that can be different depending on the county. There are also 3 to 5 members who are elected from within the taxing entities that that county represents. In addition to those, there are 3 elected board members that you may have remember voting for last year in the election. This is a new law, the first time that there are publicly elected members of the board of directors. And that's always, that's already been a lot of fun for us to kind of get to deal with. And so the CAD's job is to, like I said, to set the value for each property. And they also award exemptions, such as the homestead exemption, which allows you to reduce the value of your home if it's your personal residence that you live in. So that's the valuation side. There's also the tax rate portion. Now, tax rates are not set by the appraisal district. Tax rates are set by the taxing entities who actually receive that money. And those entities generally include school districts, cities, counties, and other special districts, to name a few. Each entity sets its own tax rate, and there are limitations to what that tax rate can be set forth by the state legislature. Finally, there's the collection and spending part. And usually the property taxes for each county are collected by the county tax assessor collector. Again, there are smaller counties who there may be another entity that collects those taxes, but generally it's the tax assessor collector. Now, their only job is to take the valuation set by the appraisal district and apply the tax rate that has been set by the taxing entity. Once they do that, they generate a bill. They send that bill out to the property owner. The property owner pays that bill. And then with that money, the tax assessor doles it out to each entity who is subject to that bill. And that's their only job. They don't set tax rates. They don't set values. They just send out an invoice, collect the money, and send it to the appropriate entities. Once an owner kind of understands this system, then they're able to kind of know who to get mad at. I know we're going to talk about it later, but there are several instances in which I have to advise people, you're actually wrong. You're mad at the wrong person. And if we could just get them, focus your energy in the right direction, I think that there'll be some relief for you. So in a nutshell, that's kind of how our property tax system works.
I appreciate your sense of humor, and you bring that well into here. So how do appraisal districts in Texas determine the value of a property in the first place?
So initially, going back to that hypothetical valuation date of January 1, each county uses what's called mass appraisal. Because think about it, in some of our larger counties in Texas, such as Dallas County, there are hundreds of thousands of parcels. And these are individual accounts of real property that have value that need to be valued. And it would literally be impossible for the county, even with all of its staff, to go through and go door by door and to appraise each and every property. So what they do is use mass appraisal. Now, in a nutshell, what this does is the properties are broken down by type. And so it's a very broad breakdown at first. It may be we break it down into commercial properties and residential properties. From there, those two categories are continually broken down until each category has a specific set of properties. So for example, we may take the commercial realm and we break that down into things like apartment complexes or hotels or shopping centers. Then we take let's say the hotel section, and we say, okay, There are hotels that offer full service amenities like a restaurant and a bar. There are limited service hotels that don't offer all of that. There are extended stay hotels that are specifically set up with small kitchenettes for people who stay longer. So once these are all broken down into their individual categories and, depending on the size of the counties, we can get very, very, very specific. But once that's done, then a sample of those properties are appraised by the appraisal district. And once they find the information from that sample of properties, they apply that to all of the properties in that category. And that way they don't have to go and appraise each individual door when we're getting into this. Now, the Texas Property Tax Code sets out rules for valuation. And one of the main ones that you'll hear a lot of fuss about is that the properties must be valued at market value. And this means that the property, it's the market value. Let me start over there. Market value is the value at which a property would sell for if it's on the market, exposed to a number of sellers for a reasonable amount of time, and both the buyer and the seller have all the information they need to make an informed decision. And that's what we think about when, for example, you go and buy your house. You're going to look at the price that they put on it, and you're going to say, well, is this good? Maybe I could offer less. And of course, the seller wants you to offer more because they want more money. And so the value you end up negotiating on, theoretically, is the market value. And that's how these counties strive to appraise all of their properties. However, the Texas Constitution in Article 8 also says that taxation should be equal and uniform. Now, this definition it's a lot more defined, a lot more complex. But to make a property equal and uniform, the way we start that is we take a set of comparable properties that are similarly situated to the subject property. Then within that, we adjust those comparables based on their individual characteristics as if they were the subject. Once we figure out what that value is, we apply it to the subject property, and we ensure that way that the property is valued equally and uniformly. They'll also consider some special appraisals if the property is very unique. Let's say that you have a special electric company or an electrical substation that may receive a special valuation. Also things like oil and gas, the compressors and things that are used to get the oil and gas out of the earth, that is taxable property in Texas. And those also have some special valuations. But in a nutshell, that's kind of what we focus on.
So, when a property owner receives their annual assessment notice, what are the most important things that they should look at right away?
So the first thing that they should definitely look at, besides the value, is the deadline for filing your protest. Now, generally, the notices go out each year, and we're talking about the notice of appraised value. They go out in mid-April of each year, and you have until May 15th to file a protest, or you have until 30 days after you receive your notice of value to file a protest. And that's a very short window. You have about 30 days after you receive it. And it may seem like, man, that's tons of time, but we all get busy and we know that 30 days will fly by. So as soon as you receive your notice, the first thing to do is to check to see when your protest filing deadline is. That will allow you to fight the value or anything else that you may feel is wrong with the property. Maybe you didn't receive an exemption that you felt you were entitled to. You can protest that. Maybe there was supposed to be something that carried over from last year that didn't carry to this year that you need to protest, and you can do this during that time as well. So you pay special attention to that deadline. You also want to take a look at it and make sure that the property on there is actually your property. It doesn't happen often, but very rarely we do see cases in which the property that's described on the notice is not the property that's owned by that property owner. And sometimes, unfortunately, they've been paying taxes for several years on a property that is not actually even theirs. So you want to ensure that the property description matches what you own. And again, check for those deadlines. And those are probably the two most important things to look for.
I can't imagine how disappointing it would be to discover you've been paying taxes on the wrong property. Wow.
Oh,
Well,
yeah.
from your experience representing property owners across Texas, what are some of the biggest misunderstandings people have about how the property tax system really works?
So, probably the number one misunderstanding that I see is the who does what misunderstanding. I've had people who call me and say, "Hey, Chris, I've had this issue with my property value, and I went to the city and I gave them a piece of my mind." And I'll tell them, and I was like, "Well, did the city then just kind of look at you funny? Because the city does not set values. The city only is going to set their tax rate for the city." Likewise, I've had people who mail their tax payments to the appraisal district. And unfortunately, in most counties, the appraisal district does not accept tax payments. Those are accepted by the tax assessor or collector. I've had other issues where people get mad at the CAD or the tax assessor and they say, "This tax rate is just too high. You're just taking all of my money." Well, unfortunately, neither of those entities set the tax rates. So again, going back to what I talked about earlier, knowing who does what's very important because that's what you can then focus your energy where you need to and get the relief that you want. Another thing I hear a lot is when we're talking about property values, I hear people say, "Well, that's more than I paid for it, Chris. I didn't pay that much for it. And now they're telling me that that's the value I pay taxes on." And so the first thing to remember is that valuations can occur as often as every single year. So on January 1st, when they make that hypothetical valuation, it could change. It could increase, it could decrease, depending on what the market is doing in the county that you live in. If you currently live in North Texas and you've been here for a few years, you know that housing prices have skyrocketed. At the same time, commercial office buildings, for example, those prices have decreased. But if there's another boom and we have a lot of businesses move here and there's a higher demand for commercial office properties, we may see valuations go up year over year as they have done. Right now, one of the hottest properties is warehouse and distribution centers. So these are huge warehouses of, 200,000 or 300,000 square feet. And the most common tenant there would be a place like Amazon, who stores things locally so that they can get them delivered to you in 2 days or less if you have Amazon Prime. And we are seeing a huge market for warehouses. And I have seen warehouses in certain areas of Dallas County that double in value just because there is such a strong demand. So one thing to keep in mind when you're considering, whether or not to protest your value each year is, what is the market doing for my property type? Are houses prices up? Are house prices down? And how does that affect my value? And probably the last one is also a funny one is, when we talk about values and the person says, "Well, I couldn't sell it for that much. If the appraisal district thinks it's worth that much, tell them to write me a check for it." And again, this gets back to market value. Yes, there are times, more often than not, that the appraisal district may get your value wrong. And that's where you can go in and protest. And if that doesn't work out for you, you can file a lawsuit. But it's always important to just remember that the valuation is every year and it can change. If the value is placed on it, they're not always arbitrary numbers. Sometimes there is some thought put behind it, and maybe some houses in your neighborhood have sold for that much or more. I'm continually shocked by the amount that people will pay for properties in Texas. And having lived here all my life, and I see people paying, what I think is 2 or 3 times what the property's worth, it just shows that the demand is strong, especially for commercial properties here in Texas.
Well, that is it for today's episode of Texas Property Tax Strategies with Chris Tejeda. For anyone listening who believes their commercial property may be overvalued or wants to better understand their options, you can learn more or contact Chris at bowlinglegal.com. Thank you for listening, and be sure to like, subscribe to the show, and leave a review if you found this episode helpful. Thank you, Chris.
Thank you, Leanne.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.